Hello everyone, this is Jordan at Pure Elliott Wave with your weekly update on the Eurodollar for you. Before we get into it, I'd like to remind you that we only have about 2 weeks left of the free updates on YouTube. After that, we're going to be purely on the website at pureelliottwave.com. If you'd like to sign up to get a special grandfathered rate, which will be cheaper than all the future rates we're going to give for this product, you can use the link below. Then you'll have 5 daily text reports and obviously the video every Friday. So look forward to seeing you guys there. So for the week, we mostly had sideways price movement, and according to our data, we did not get wicked out on that last upper wick. So because of the sideways price movement and the difficulty of counting it as an impulse to the upside, both of our wave counts now are showing the diagonal, and both wave counts, the main and the alternate, are expecting a pullback to come. So with that being said, let's get into the weekly chart. On the weekly chart, you can see this familiar sight if you've been following us with the Eurodollar in the past. We have a grand super cycle triangle commencing in front of us now, with super cycle B complete down here and super cycle C going upwards as a zigzag Elliott wave structure. And within that Elliott wave structure, the zigzag will be composed of a motive structure, which we have the first leg of being primary wave 1. So within that primary wave 1, it's most common to be a impulse wave. So we have our first wave of that impulse complete, and potentially intermediate wave 2 continuing to the downside as an expanding flat, where B in this case retraced at least 105%. In this case it reached 107%, so we're expecting to see a C wave to the downside. A major sign I'm looking out for to the downside is if this best fit channel, which has 4 tests to the downside, is breached, then that would be confirmation to me that a C wave has in fact started. Invalidation sits below, where any wave within an impulse may not reach beyond the start of wave 1. That's at 0.95364. On the daily chart, we're going to pick up from this high right here and take a look at the price action in minor A and B. Picking up from the top of intermediate wave 1, we can see minor A to the downside as a zigzag, and minor B as an expanding flat, A at minute level, B and C. For that C wave, must subdivide as a motive structure, which can either be a diagonal or an impulse wave. And with all the overlap here, we have labeled it as a diagonal. Otherwise, this would be a ginormous extending wave because of all the overlap here. Following the Elliott wave rules, this structure gives us the best look for A, B, and C. We also have an alternate, which sees this intermediate wave 2 instead of ending down here as ending here. So I'll get to that in just a moment. I also have 2 best fit channels for you. The blue channel, which I've already covered in the weekly chart, which had the 4 tests from before. We also have a short-term channel from March 25th, which is the top here, and that encompasses all the price action over the past month. So a breach below this orange best fit channel on a closing basis and not touching may be a very serious sign that this C wave may be commencing to the downside. Invalidation level sits just above at this level within the diagonal. That is where wave 5 would exceed the length of wave 3. So if we do see price reach above that level, that would invalidate all of these diagonal wave counts, and we'd be looking at a impulse structure to the upside, which would most likely be very explosive, probably being a compounding 1 2 1 2 1 2 1 2. Then we'd finally get to that third wave and it would be explosive for sure. What I'm personally doing is if price breaches below this fourth wave, at the bottom of this fourth wave, then I'll put my stop at the top here, which yields a very low small risk and a big reward potential. We have a target zone for minor wave C to reach the 1.618 ratio between C and A, which they often do exhibit those ratios, so that's a good number to look at. And then we also have the intermediate 2, 618 retracement of intermediate 1, which would be 1, and then a 618 retracement to the downside. That gives us a target zone between 1.02862 and 0.99505. Now let's move to the hourly chart, picking up from the bottom of Minuet 4. On the hourly chart, you can see the end of Minuet 4 here at the bottom to Minuet 5 and the completion of minor B. So you can see just how much overlap we've had recently. All of these different waves overlap each other, including for the downward movement we've had. So with all the overlap, the weakness and the volume to the downside in these particular movements, that's why we went with the ending diagonal on both this and the alternate. You can see we have that best fit channel, the tighter best fit channel in orange here. And if we did see a subsequent breach of price at that level and a daily candlestick closing below that, it could be a really good signal. Upward invalidation sits pretty far off. It is about this distance 2 times over to the upside, so 0.02. And the green line here is the line from the ending diagonal, which completed with 4 and 5. And there's another line, you can't see it here, but it is right underneath this orange line, pretty much exactly parallel. So we're already starting to break down the line from the diagonal, and this recent price breach broke that line with much more authority. Minor wave C to the downside must subdivide as a motive structure. So preliminarily for this price action, I've just put a expanding leading diagonal for Minuet 2. It's always hard to tell exactly what scale the new motive wave will be, but we can adjust next week when we see how this price action unfolds here, potentially upwards to complete this ABC structure, and then subsequently downwards for minor C. Now let's look at the weekly alternate chart. This is the alternate chart, and you can see why after this impulsive structure to the upside, we've really only had these 2 movements. And usually for a corrective structure, they subdivide in at least A, B, and C. And this ABC structure here would classify itself as a sharp zigzag, but you can see C here really did not correct downward like a sharp correction would. It actually only retraced just barely beyond the end of minor wave C, which is why we give this a lower probability of this happening. On the daily chart, we're going to pick up from the bottom of minor wave 4 into the end of intermediate 1, 2, and minor wave 1. On the daily chart, you can see a lot of similarities with the main chart, including this diagonal structure here, characterized by the pink line here, and there's a pink line underneath of this orange line that's hard to see beneath the best fit channel. This is also expecting downward momentum over the next few weeks, but at a shallower rate. Target for minor 2 is to reach 0.618 ratio of minor wave 1, and the invalidation sits at 1.05169, where within an impulse or a motive structure, no wave may move beyond the start of wave 1. As with the main chart, I would keep an eye on this orange best fit channel that has all the price action from March 25th onward. On the hourly chart, we're going to pick up from the bottom of minute 4, and you'll see a familiar sight. So this wave count is nearly identical to the other hourly wave count, where instead of minor wave 1 completing, we had minor B completing. Invalidation upwards is still the same, where that fifth wave would overshoot the length of the third wave at 1.1271. And to the downside, I've also identified an expanding leading diagonal for Minuet 1. Downward movement next week is expected. This is the weekly volume data for the euro-dollar. Overall, we've had a severe decrease in volume from the bottom in September 2022. Had a small spike on the upward spike at the end of March, overall declining there. But this past week we had a little bit of a push on volume, but that little bit of push from volume really didn't show any bullish progress. And when we look on the daily, you can see that volume came from bearish candlesticks. It's money flow. It's currently neutral, and unbalanced volume is trading in a pretty weak range. You can see on the daily that range is much stronger, so we'll lend a little more weight to that if it does in fact break out. On the weekly chart, for traditional technicals, you can see the momentum at which we were increasing is slowing, and we are increasing at a decreasing rate, which will be more evident in this formation here. We did have a shooting star, but we'd like to see a continuation of bearish price movement to confirm this topping star. It's not as strong as an evening star, but it's still a decent impending top signal. Resistance, it's overhead at 1.117 and major long-term resistance at 1.140. Keep an eye on that level, because since 2008 that level has acted as major breakout zone for the euro dollar. ADX is showing we are in a bullish trend that has not yet reached overbought. RSI is still neutral with a little bit of ways to go. Stochastics are overbought, but during a bullish trend, we use RSI and ADX. ATR has been overall flat for the recent upward movement. Not a good sign if we want to see an explosive move to the upside. The 200-day moving average is upward sloping, and we don't have much support until we get to 1.050, so could expect some support there if price did fall. This is the daily volume data for the euro dollar. Overall, you can see had quite a decline recently in volume, followed by a flat period, and just recently we had a spike in volume, but that spike is associated with flat movement, and the strongest of that volume is associated with the 2 recent days of bearish price movement. So I'd give that a bearish analysis there. Money flow is currently neutral, and unbalanced volume has actually traced out a good range in this area. You can see we have 1, 2, 3, 4, 5 different tests of the bottom and 4 tests of the top. So I'm keeping an eye on this to see if there will be a breakout from unbalanced volume in the next week. Last of the daily technicals, it's very evident that this upward trend is increasing at a decreasing rate. The trend is getting flatter as we go along the curve. We also have a few candlestick patterns that are bearish, including recently a hanging man. For hanging man, they are a little bit odd because the price action inside them looks like they'd be bullish. That's a good reason to wait for confirmation after a hanging man and see if we will see subsequent bearish price action. All of the moving averages are overall bullish, with the 13-day moving average upward sloping and above the middle 50-day moving average also upward sloping. We saw the 200-day was upward sloping on the weekly chart. We can't see it right now on the daily. We don't really have any support until 1.050. ADX is reaching extreme with the DX line, the black line here, over the positive green DX line and the negative red DX line. It's not very extreme until it reaches over 45, but currently it is extreme. RSI showed some divergence between the two tops here, the one at the beginning of February and just recently this past top in the middle of April made a higher high on a closing basis, which is what RSI is calculated on, and RSI showed a lower high, which is a bearish divergence, but because of the length between the two, we call it slight bearish divergence. If the highs were right next to each other, then we could potentially see that. You might say, oh, this high is right next to that high and it shows a lower high, but you have to make sure you're looking at the closing prices because that is what RSI is calculated based off of. Otherwise, it's currently neutral. Stochastics are neutral. ATR is declining overall as price moves higher, which kind of fizzles our chances to see an explosive move upward just based on ATR alone. Overall, I'd say this chart does support the Elliott wave count, and the daily chart is definitely more bearish than the weekly, but the weekly chart did have the bearish reversal pattern. Overall, we'll look to see what happens over the next week, but I do expect some downward momentum based on all of the indicators and Elliott wave patterns. This has been Jordan Marshall at Pure Elliott Wave. Thank you. Goodbye.